Chicago. My name's Eric Geiger. I'm the Managing Director of IT Operations to the Federal Home Loan Bank. And we're not a startup. We're not a dot-com company. In fact, we were chartered by Congress in 1932 to provide, or to help the home purchasing market. There are 11 districts in the home loan banking system. Chicago is one of them. And today we're a $70 billion wholesale bank. And what that means is that we loan money to banks. And we do it for the purpose of supporting home purchasing. Now, a few years ago, we were at a bit of a crossroads. We had some problems with our traditional data center. There were some physical requirements or some physical infrastructure upgrades that we had to do. They were going to be very expensive. And they were also going to be very complicated for us. We also were looking at taking advantage of more commodity services and outsourcing. That was also going to be expensive for us. And we really wanted to focus on changing our model so that we were doing more IT integration and that we were really looking at our differentiated solutions to provide better value for our members. And as we thought about ways to get us through this, we looked at this thing called the cloud. And the cloud promised better performance, lower cost, and particularly at the time, it promised it in some very specific types of areas. And we had two of those. First, we had this big analytics platform. And it was the perfect example of high-performance computing. It required a lot of calculations to happen, a lot of processors over a very defined period of time. And then they would sit idle for a very long defined period of time. And that's frustrating. It's frustrating for anyone in infrastructure because you have to pay for it even when it's not doing anything. We also had disaster recovery. Everyone has disaster recovery. It's a critical part of your overall infrastructure, but it suffers the same frustration. You have these systems that you hope you never have to use, but they need to be ready to go at a moment's notice, and you have to pay for them. You have to pay the cooling costs, the floor space in your data center, and you have to keep them updated and managed, and that can be frustrating. But infrastructure as a service looked like a great way for us to get past a lot of that frustration because it could take that cost component and it could diminish it substantially. And so we started a POC, a proof of concept on Amazon a couple of years ago. Now, while the technical piece was running and the proof of concept, we actually had to go back and make sure that Amazon itself would work for us. Technology-wise, the infrastructure looked like it was going to be great. But Amazon has all these certifications, all these accreditations, and that's wonderful, but we needed to map them back to our own internal controls. And so we created a whole framework, and then we took all of Amazon's available data and we mapped them back in to make sure that we wouldn't lose anything by moving into that infrastructure as a service model with these applications, that the same types of controls we expected to have in our internal data centers, or our managed service data centers, we would get through Amazon. And once that framework was done, we reviewed it internally with our IT ops and our security folks and our auditors, and we agreed that it would look good. But then we had to cross the next big hurdle, which was security. So the cloud and security. It's always a nervous point for anyone when they're having a conversation about moving big portions of their environment in, and everyone who does it has to go through their own analysis to make sure that it works. For us, we actually did the same thing we did with the rest of our controls. We took all of our security controls and we mapped them back to the available services that Amazon had. If there was something that had to change because we're moving from a traditional model to a cloud-based model, we did an evaluation of that and we figured out what those changes would need to look like. We worked with internal and external vendors to make sure that our framework was going to look good and that it would be safe. And most importantly, we set up a group of rules for cloud adoption and for readiness so that when we wanted to go to production, we knew that we had the things in place that we needed to have. And sure enough, after we were done with all of that, it looked like Amazon, in fact, was going to be reliable, and it was going to be secure, and that we'd be okay to move forward with real production workloads so we could get out of that proof of concept. So we went live on Amazon, and we did it with that big analytic platform. We did it with our disaster recovery suite. And we began to run in East and West regions. We got geodiversity, which was something we hadn't had before, which was very exciting. And as we had more and more success with more and more apps that we started looking to run on Amazon, our developers took notice. The fast procurement times, the ability to do quick config changes, and they really liked it. So we started to do more and more development out of the Amazon platform. And an amazing thing happened. As we would put systems in Amazon, we saw that they would run faster and that they were more reliable than the traditional systems, really with no other change except for that infrastructure move. For other systems, we saw that we could simply make easy, fast configuration changes inside Amazon that would help those systems run faster, be more reliable. And it was a huge win. And the thing about that type of success is that it breeds more interest in getting that kind of success. And so, having had started the proof of concept back in 2013, we began to immediately build out more in Amazon. And by about 2014, the very beginning, we'd reached about 30% of our infrastructure there. And suddenly, it occurred to us that we wanted to do more and more. And so we took a little bit of a pause, and we said, you know what? How do we get everything there? We formed a team, we came up with a plan, and we began that migration process. At the end of 2014, we kicked it into high gear, and by the beginning of 2015, we were in fact completely in Amazon. Overall, that process took us about 28 months to go from 0 system, 0 infrastructure use to 100% infrastructure use. The migration in earnest took us about 4 months to move from that 30% plateau up to 100% plateau. So we completed it in April 2015, and it was a very big success, and it continues to be a big success. Operationally, we've got a new framework, a new model for doing governance with these instances and with our cost management, and that makes our operations team extremely happy. Our developers and our project managers, the procurement times have dropped to almost 0 for bringing up new systems. They can do more experimentation, they can do it quicker. That makes them very happy. And we've observed application performance increases almost across the board, which makes the business very happy. But frankly, most of all, what makes us happy, what makes our members happy, is that we saw about a 30% reduction in cost overall for our infrastructure, which is phenomenal, all simply by moving existing workloads into the Amazon environment. So I'll leave you with this idea. We're an 83-year-old organization, and we've seen every technology change that has happened over those 83 years. And the Amazon change and moving into infrastructure as a service has been one of the best ones for the bank and resulted in some of the best improvements to our operations model and to our partners that we've seen so far. Thank you very much. Have a great rest of your summit.